All right. Enough messing around, right? We're not here for fun. We're here to be serious, right? There's no room for fun here in crypto, right? It's just to be serious. No, you gotta have fun with whatever you do. I try to have fun. It helps me out. I am Big Cheds. I want to say a heartfelt thank you to each and every one of you out there somewhere in the world. I love the fact that I can go live. You can watch it. You can talk to me here in the chat room. You can see what I'm doing, and we're connecting, and we're doing this all over the world at the same time. And we're pretty, and that's the point. We're so similar. There's so much about us that's so similar. So I enjoy sharing this with you, kind of sharing that common humanity. Hello from Czech Republic. Cheers from England. Folks, please hit like, please hit subscribe as well. From Greece. Love from the Kremlin. Okay. All right. That's great to see everybody. It really is a worldwide thing, so that's really cool. So listen, Slovenia, and we have someone from New York. That's great. So listen, I see Argentina. They're going to keep flying in. Texas in the house. So listen, I really appreciate it. If you're watching, I appreciate that. I want you to know that. I might see. I'll see you on Twitter, and I may or may not see your message. So, and I may not reply. So, like, don't take it personally. And like for the video here, there's a huge chat room. I don't have a team. I get these emails. It's like, oh, can you have someone in your team contact us? It's like, what team? I'm just hanging out. I'm studying charts. I'm teaching as I go. I'm having fun with it. I'm the author, of course, of Trading Wisdom, 50 lessons every trader should know. We'll get to that. So let's get that stuff out of the way, and then we'll get right into the fun. Let's go right here. I'm on Twitter. I'm at Big Cheds. I am the author of Trading Wisdom, 50 lessons every trader should know. It's great, has great reviews. You can get it in 4 different formats. Like if you don't want to pay for it though, I've got your back. If you go to my YouTube channel, Cheds Trading, go to playlist, Trading Wisdom. I'm going to do the whole book for free. I've done 13 lessons. I'll probably do lesson 14 this week. I'll eventually get the whole book for you for free. So you see my tweets and you have no idea what I'm talking about. Well, you need to first of all go to the tutorials and watch these. Start with the most recent one. It will explain everything. My whole setup. Go to the quick market updates. That's what this is. These quick market updates, especially recently, I'm going to explain my tweets. So if you see up here up top, I have like 10 or 15 tweets I'm going to explain. And then hopefully that will kind of, get us from where we were in our last update. The last update was on April 8th. And I don't do these a lot because I'm a founding analyst at Bitcoin.live. And I've been for over almost 4 years, I've been doing twice a week full market updates. And like, I don't miss those. It doesn't matter what's happening. So I don't always have time or energy to really do YouTube. So these streams are rare. Highly recommend you check out Bitcoin.live. I'm really proud of it. We have a great group of members, so consider checking that out. So that's kind of all that stuff. We have the chart up. So I'm gonna kind of do a little bit of backstory, kind of how we got here, and then I'll dive right into the kind of the progression of the tweets, what I wanted to talk about. Seeing everybody in the chart, Montreal on the chat, Montreal, Nigeria. Good to see you in Brazil. So listen, folks, again, thank you for watching. So listen, if you want to know like where I'm coming from, it's all there. Like I don't delete tweets, I don't delete videos. You can kind of see the progression, and I just follow the progression of the price action, kind of a combination of Japanese candlesticks and classical charting principles. We've been in a corrective phase. I talked about the topping back in November and kind of live tweeted it, live did videos on it all the way down. And so we've been in a corrective phase, and you can anybody can kind of step back and kind of visualize generally a bear flag. So if everybody's a bull, everybody sees this and everybody's calling bull flag. So you got to also kind of see it in the reverse. And what this is, it's a correction, a temporary correction within a trend. And that usually resolves in the direction of the trend. So you're kind of looking at what's going on. If you're just looking at it from that standpoint, you see, okay, we have a bear flag, after a breakdown, the up thrust, and we're consolidating, right? And after consolidation, trends tend to continue. You see all that. And then there's all these clues within that. And you kind of see the MA, 200 underside rejection. You see the loss of the MA 200 potentially rolling over, which would be a huge warning sign for the trend. I've been tweeting about this. I've been talking about it. And then most recently, like the big elephant in the room, I put out a tweet that people are kind of underestimating the impact of what just happened, the damage on the false breakout. We had this really kind of unimpeded downtrend, and then after the double top, kind of a corrective phase, and then we had that kind of first overreaction, high volatility, bottoming candle with the spring, the false bear break on January 24th, set the high, came back, we did it again February 24th, right? All the stuff we talked about. We set the level, we broke out, right? When you have a level that's this well defined, with time interval in between attempts and with the multiple data points, it's a really significant level. You break it and you fail to hold it, right? It was full risk off below 45K. And I've talked about that. So that's kind of how we got there. So after that, you're not itching to go long. A lot of people looking for bull narratives, but you're avoiding them. You're waiting for confirmation, right? You're a smart trader. You've studied these things. You've been around more than one cycle, and you want to buy into bullish confirmation, right? You're not just going to kind of buy every minor relief rally, right? Every minor bounce to a moving average in a descending channel. You're not going to do that. You're more patient. You're more disciplined. So you've kind of been without a trade for most of this choppy channel. Anyway, so where are we at? Let's go back. So my last video was April 8th. And in April, and I talked about kind of here. So we had the rejection, despite all the enthusiasm on March 29th, right? It's worth observing the daily tweezer MA at the MA 200. So right here. So we kind of saw all this coming. We kind of saw it happening in real time, right? We saw that everyone's enthusiastic, but we have a candlestick signal. We have the shooting star at the upper Bollinger, bearish confluence, MA 200, moving average underside, rejection. And then the tweezer top, which is fine because as long as you hold the throwback, everything's good. You didn't hold the throwback or the retest of the horizontal zone, but that was the beginnings of that. And then boom, flashing a major warning sign. So this was April 1st. That's kind of led into it on signs of a potential failed breakout. Where I'm just going to go. I'm probably not going to check the chat room. I'm just going to kind of riff here and hopefully get through these, but. You could see where we had the failed breakout, warning signs, April 1st. So we initially started to violate it, April 1st. And we ended up rallying on that day, and people were again long. People were again itching to go long. This was a blimp. This is a bear trap. You see the where it's like they're scooping up the guppies below the stop loss level. There's this meme that like bulls were posting all the way up to November, and then they, they're still here, but anyway, so that's what they were saying here. But for my money and what I've been talking about in my commentary, my analysis, I've talked about this, you can see it, is that trust had already been violated. You'd already kind of broken the level. And for me, you're starting to now look for a lower high. You're starting to look for kind of a bounce to fade at that point, because you're almost definitely going to break that level. So major warning signs, and then we did break through. So April 9th. So at this point, it's April 9th. Where am I at? So I'm going to kind of explain my thinking. So we're down here. So we've broken down, and I'm like confirmed in my mind, like, okay, I know exactly what's going on with high confidence. And then just the price continues to confirm that thesis, right? So now we're down here, April 9th. Down to around 42K, and we're at like a potential, there's all these like potential support levels, 40K, 42K, 40K, 37.5. These are all kind of theoretical, ill-defined support levels as opposed to the well-defined resistance zone, right? So this is, what was this in response to? Let's see. I basically said, basically like, if you're going to risk money, like, arm yourself. It's almost like if you're going to go into battle, like don't go into battle without a set of armor and a sword. I mean, like give yourself a chance, right? Because trading's so hard. It's mind numbing. It's all that stuff. So someone replied, or just close your eyes and dollar cost average Bitcoin, wake up and you'll be happy in 5 to 10 years. And it's probably true, but like depends. Because first of all, you've got only like 10 years of history. So the whole thing, like we can never go below a prior all-time high before just because we haven't done it. I mean, you don't have that many data points. So yes, this maybe is true, but you're giving away, it's an excuse not to exercise any risk methodology along the way. It's an excuse not to define your risk. And that goes against everything everything you've learned. Right. And it's so I say, okay, this is your excuse to forego, risk management and basic trend analysis. What guarantees do we have this coming decade does what last one did? And that's the point. You can't just rely on that. Like I've been down in too many plays, in too many chat rooms over the years where I just wanted to hear what I wanted to hear. I just wanted someone to tell me it was going to be okay. And like this feels like that. Follow the trend, and focus on momentum, all this other stuff. You can't just assume it's going to be okay. You have to define your risk. Okay. April 9th, that's the backdrop to that tweet. April 10th. So what's going on with the price April 10th? Let's take a look. So we're after the failed breakdown, 45K. We'll leave that up there. We'll kind of take a look here. So what are we doing again? April, okay, April 10th. All right. So yeah, all right, here. So like, all right, so this is, you've lost 42K, you've had a flush, right? But what have you done? Even though people say, oh, you're so bearish. Yes, I'm bearish because the price is bearish, but you've got an upper to lower Bollinger move on the daily, right? You're likely to have some relief soon, some kind of a minor mean reversion to the EMA 8, right? And you get that, and you get this all the time where the 8 rolls over, and it's support, and then it becomes resistance on the way down. And so you've seen that. It's just standard. It's just standard, right? You got to understand that, and that's why. Like, look at what you're buying and where you're buying it and kind of the context of the story, right? It's like a 4-act play. Like, understand where you're buying in that. So this is after it's breaking down. It's gonna have a relief rally. It's not the bottom. It's a bounce which should be faded. But you can go long here and maybe make some profit up to 42K, right? So what I said was most likely scenarios reset oscillators and then continue the fade. I'm basically telling you here, we're probably going to bounce. And while that's bouncing, like the RSI is gonna build up again, right? It's already down to sub 30. It's at 20 and whatever time frame, 4-hour. Everyone's trying to go long early on their divergence. You finally get some relief, and the RSI trickles back up. You get that hidden bearish divergence with the higher high in the RSI back up to 50, 60, and then you can continue down. So you see pauses. That's like what a bear flag does. Any kind of a consolidation or continuation pattern, it pauses and allows those oscillators to reset. So that's what I mean, right? Oh, Ched, you're so cryptic. What do you mean? I'm not going to tweet this and then like type out a book to you, right? You can read my book, or you can Google. You go to YouTube. Like if you're curious. Satisfy that curiosity. Do it. But I'm not going to give you everything. I don't have the time for it. And plus, I could give it to you, and you still would say, I don't know what you're talking about. So it's got to be your journey. But this is a pretty clear message. Relief, reset oscillators, continue fade. Oh, Cheds, what do you think? This tells you exactly what I think. I could do a 10-minute video on this, but that tells you exactly what I think is going to happen. There's all this subtext, and it tells you exactly what's going on. Here we go. Next is April 11th. So I'm telling you this. First, I'm saying, look, people are going to probably long here. People are going to start longing here. Let's clear that up a little bit. And April 12th, or what we got here? If you were smart enough, April 11th. So if you were smart enough to short, so this is that same day. We're kind of breaking down. We're below 40K. You can see that kind of progression of the lower Bollinger dips in that rising channel, right? You can see that. If you're smart enough to short on that kind of breakdown level, which we talked about kind of at the beginning, major warning signs, right? If you're smart enough to short there, there's a good spot to take profit. I'm basically saying, like, we're probably going to bounce. This is exactly what I'm saying. Like, and it's tying into that other quote from my book where I said, when you're so excited about your trade that you're getting ready to send a screenshot to your buddy, that's when you should take profit, right? And so I'm kind of tying that in. I'm basically saying, like, hey, if you're right now, a lot of people are feeling really good about their short, probably a good time to take profit because we're probably going to bounce. And so what is that? That's on the 12th. And so we get a little bounce, and it's expected. You get a little bounce right up to the EMA 8, primary downtrend or primary uptrend resistance. It's like almost every time. And it's typical. So And a lot of people are getting excited right here. April 13th, they're getting excited. And it's like, this isn't where you get excited. You haven't even flipped the underside of this price cluster. It's like, what are you doing? It's an underside EMA 8 tag, which is like a 9 out of 10 reject on this kind of in this kind of price action. It's like anyway. I can't. I'm glad that other people disagree. That's how you make a market. But I'm looking at this. I'm like, of course. So if you're smart enough to take a profit, then it's bouncing. While this is going on, this is a point I want to make. Sometimes I had someone say, like, Cheds, I don't know if you're bullish or bearish. Like, that's the best compliment you can give me. But I'm pretty clearly, like, I'm observing the fact that the trend is bearish right now, which is a secondary trend, secondary bear trend, primary uptrend, kind of over a long, like a 10-year basis or whatever. We're in a strong bearish secondary trend right now. That's the trend. But I can still articulate kind of a larger bull thesis. Like a true chart technician can articulate the bullish and bearish thesis. Like, that's the point. You have to be able to, because if you can't, you won't be able to see data points that kind of eventually will start to build up in that direction, then eventually kind of topple it over like a seesaw, right? You have to be able to, so I'm still observing 3-day market structure still intact with the MA200 close above. And you can just kind of see the price has at that time had held close above all of 2022, especially as it was setting kind of the bottom of the range and setting the top at, 45K or 46K, where it eventually broke out and came back, right? So 3-day market structure still intact, April 12th. So that's that day. We're right here. Okay. Oh, no, that's here. That's this day. Okay. As we're kind of expecting a bounce, a little bit of a bounce. And what do we have here? April 14th. So, I'm watching it and we're getting up here and I'm starting to look for lower time frame rejections, just because that's where you should get one. That's where it makes sense to get one. I start to observe the beginnings of a tower top. And I tweeted that out. 4 hour. This is right here on that day. 4 hour looks like it's setting up for a tower top. I later kind of quote tweeted it as it had completed and, kind of like, I guess, patting myself on the back. But it's also because it's fun. It's fun when you spot things and they kind of play out the way you've read in a textbook or the way it kind of makes sense based on your interpretation and your experience. It's fun. It's like when you're in poker, you hit like a flush draw, the flush hits. It's exciting, stuff like that, right? So what I'm trying to say here, and this is on April 14th. So I basically said we're probably going to relief rally. Here's April 14th. It's kind of in this area, and we probably just started to break down. We actually had broken down quite a bit. I said a standard mean reversion to primary downtrend resistance, EMA 8. It's a standard to mean reversion. You're bouncing back to kind of the middle of the trend, a middle of that downtrend that allows your indicators, your oscillators to reset. It's a standard mean reversion bounce to primary downtrend EMA 8. And then we have it right here. So I'm kind of showing what happened before, and then I'm showing what's happening essentially on that day or really the day before. Right? Standard mean reversion. 4H tower top into likely continuation towards daily range lows. What does that mean? What is that? Cheds, you're too cryptic. Cheds, what does that mean? I'm saying we just bounced because we probably should bounce. And now we're going to reject where we should reject at that spot where you look for it on a lower time frame. We have a reversal pattern. That reversal pattern is just completed. So we're probably going to continue doing what we've been doing towards in the direction of range lows, right? That's what we're doing. That's where we're heading. It's momentum. It's like, what direction is the train heading? What direction is the car heading? What direction is the missile heading? It's heading in a direction. That's what this tweet says. That's what I'm telling you. Here's your data point. Price did bounce and chop above that, but this is what the trend is telling us, okay? Now I'm getting, Chad, you're so bearish, April 15th. Yeah, I'm trying to get through to you. I'm trying to explain to you that people are underestimating the impact, the damage on the trend of the failed breakout, and your favorite influencers are still pumping you full of hopium. They're still telling you it's going to be okay. They're drawing their this, they're drawing their that. They don't want you. They want you to feel good. I don't, I want you to feel smart. I don't want you to feel good. I want you to feel smart. And this is April 15th. The easy money's been made. It's a grind. That's it. Be ready. It's a grind. Get ready. It's survival market. There's good money to be made, but you have to grind. You have to learn. You have to be smart. Okay. And a lot of you aren't going to make it. I know it. I just know it. You're just probably, either you just don't have the experience and you're probably not going to work hard enough. You have to work really hard, and you can maybe sometimes you have to get lucky. It's everything. But it's discipline. It's discipline. It's risk management, and that's why that earlier tweet about that's why this thing earlier drives me crazy here. Like, you can't just forego risk management, okay? Because who knows? I don't know if you're going to make it. Are you going to be here for the next bull run, or are you going to have to capitulate because you have to pay your bills? Um, I'm not bearish. I just switched from Kool-Aid to water. I mean, it's being a little bit harsh here, but I just like the copium, the hopium, the kind of false, in my just not good TA, hopium TA charts. It kind of bothers me because it's like you can't ignore what's going on. Sometimes I'm emotional. And some of that's in here, but I'm telling you what I think. I'm telling you exactly what I think. All right. Um, this is a tweet where I'm basically telling you, pay attention to this because I'm setting up the next tweet where I say first close below since, right? I'm basically saying it looks like we're about to break a record here, because earlier we talked about the fact that the 3-day MA200 had held, right? It held, right? I'm telling you now. I'm starting to talk about it, reminding you, has not closed below since April 2020. All right, we're getting there. We haven't closed. All right, at that point. And that's on April 18th. All right. And I'm sorry, I'm clicking around a lot. That's right up in here. We're still up in there. Okay. April 21st, still holding the SMA. SMA, what does that mean? Simple moving average. Okay. There's an exponential moving average and a simple moving average, right? Exponential means more price, more weighting, more data weighting is given to the most recent candle. Okay. Exponential. Simple means all, if it's simple moving average 10, all 10 have the same weighting, equal weighting. Still holding SMA 200. Here's this tweet on April 22nd, and I'm basically saying I'm surprised people are. I'm really surprised people are not talking more about this. Okay, classical charting. I said it earlier. Like, you establish a level, data points, time interval, historical significance. And it's context as well. In this case, it was. Let me show you what I mean. Moving my hands. So it's this metaphor I've used a million times. Bitcoin.live, YouTube videos. The downtrend has to try to go sideways before up, right? Red light turning yellow before green. And I say bulls had forced. You had forced sideways. And it's clear that sideways had been forced, right? We had evidence of that on the daily chart, MA50 recapture. Moving average crosses, right? With the bull cross here, the 834 bull cross. There was evidence that the downtrend had been forced sideways. But where's that pivot point, right? That's your job, is to identify levels in the chart that reflect an increase or a decrease in the momentum of the trend, okay? And that was a level where you were going from sideways to up, and you were right there, right? All you got to do, flip MA200, hold the throwback to 46, flip MA200, and we were at 58K. That's why everybody had the target of 58K. Everyone was looking there because that's where you're supposed to go. That's where you should have gone. That's where it made sense to go. Big level, breakout, retest, and go, right? And probably, have a little messy retest and just, stair step it up there. Didn't happen. Big time failed breakout. You can't ignore that. That's like a death knell to the bulls. That's why you are, 45 below 45K risk off. I have the tweet I talked about last time. I'm clear. In my opinion of when it's like full risk off, that was full risk off. And I'm saying that Most market participants are underestimating the impact of the failed breakout. It's, you know, and that's how I felt then. That's how I feel now. Okay. Again, we're right there. I'm saying, listen, we haven't closed below the 3-day MA 200 since April. We're right there. Okay. And then we're getting close to it again. Again, a visual of what happened. Here we go. Now we're getting fun. So what happened after a bull trend, right? It's not when it just rolled over here and oh, look what happened last time. This is the context. Everyone misses the context because they're so blinded by their bias. They're so blinded by the conclusion they want to reach before even looking at the data. You can't say, oh, the last time it did this was in, whatever, March of 2020 and it ran to all-time high. No, that wasn't after a bull trend. That wasn't after a big bull move. Okay. This is after a massive bull move because you're looking at the context of the MA 200. The MA 200 came up and flattened out. So it was rolling over. Same thing here. It's the same context back here after the massive bull run, not this sideways consolidation. That was just part of that that larger equilibrium, right? The high, the low, lower high, the higher low, and the break. That's like that was part of that move, and that was part of that consolidation after the big move. So it's what happens after a big move up when the MA 200 is starting to roll over. Sorry, MA 200 is rolling over. What happens when you break it? I mean, so you could see, I mean, that's a damaged, weakened trend, and that gets you to 20K. That gets you to sub 20K. Bear flag targets take you kind of in that general area. So it's not like it's not like it's crazy to talk about this stuff and you're, ultra bear. It's that you kind of look at what the trend could do. And when you're at those key pivot moments, and we're saying, listen, I'm saying here, this is on April 24th. Here's what happened last time. Not a prediction. I'm not saying it's going to happen. And then boom, another warning sign. Okay. First close below the 3-day MA 200 since April of 2020. All right. Here's these prior warning signs. Here's the prior warning sign, the failed breakout. Here's another warning sign, right? Starting to break down. That's a big deal. That's a big deal. I had a conversation with one of my friends who's an excellent trader, excellent chartist, and he was bullish. And I said basically, that's a big deal. That's a big deal to me in my analysis, and I think that's important. Here we go. So this drove me crazy. Do I have it? Look at this thing. It's like, what are we talking about? What are we talking about with this? Like, yeah, it's a bull trend. Great. So like, you don't even need TA. If this is your whole thing where it's always been an uptrend, great. Then like, what is there to talk about? What are we even doing? Okay. What are we even doing at that point, right? Within this, what's between the lines, within this, there's all these series of failed higher lows within this, right? There's all these breakdowns, and you can see that. And it's about managing your risk, and it's about understanding the broader trend. So here's my point. Like, and I saw this, it drove me crazy. Oh, it drove me crazy. It drove me crazy. Like back at but at this topping period, after it was so clear we had topped off in November, like everyone just like zooms out to a monthly and draws like a big diagonal line. And it's like, oh, we're still in an uptrend. Great. Like, what is the point of that? What does that do? Why are we even here? Why are we even here? Like, what is the point, right? Why are we even looking at candlestick signals and Bollinger Bands? If no matter what, we're just gonna fall back to this, fall back to this. If we're gonna fall back to this, then like, what are we even doing? Right? This is like something Carl the Moon would post. So, like, what is the point? Why even bother learning risk management and TA? So it drives me crazy. All right. Again, 4-hour tower top. So why am I looking for a tower top? All right, April 26th. All right, let's clean it up a little bit. All right, April 26th. April 26th, that even happened. That's a 3-day. Okay. So we're right here, right? We just had a really nice candle, okay? We had another spring, another potential spring, right? Where we set the low, we kind of recaptured it, and we closed near the top of the candle. That's a great signal. Outside bar, completely eclipsing the prior two candles. Big, strong candle, kind of mild volume. Normally, like this is a candle set to trap you, but if you observe, we just had the outside bar. It completed. The relief rally completed at the M850 underside. All right. Then you had the up thrust or the false bull break here, right? On the temporary break and inability to hold, that 42K level. So you had the outside bar that completed with weak follow through. This bull outside bar, which is what the great candle at that time for bulls to force another, force a relief rally, force a broader relief rally. Okay. And it bounced right in. It had the up thrust, came back, and then another one. So this is a really tempting candle to get long on. It's a really tempting candle to get long on. The problem is I wouldn't go long unless I was already long down here, which would have been fine. It would have been fine to go long from when I say that from the standpoint of being prudent, cautious, taking advantage of kind of those basic overreaction moves. And on the recapture of that low, okay, you went long there. But up here, kind of light volume outside bar, and the last outside bar kind of fizzled out. And I see MA20s here. I'm already thinking fade. I'm already thinking we're going to reject. Like it just makes sense. We're probably going to reject here. So I'm looking at like 4 hour. I'm switching to lower time frames. You switch to lower time frames at the key levels. Okay. And we were at the MA20, and that was the time. That was the time when I switched to 4 hour. I mean, look at that gorge. That's gorgeous. A beautiful tower top. So right here. So look, 4H outside. Chad, Chad, you're so cryptic. Oh, he just wants to. I read a lot of them. I don't respond. Oh, he just wants to tweet it both ways so he can quote tweet. He can quote tweet whatever one is right. I mean, it literally says here, 4H outside, maybe setting up for a tower top. What does that mean? What does that mean? 4H outside, tower top. It means this. It's a tower top. It's the same thing we talked about earlier. Had done this. Where was it? Relief rally. There we go. Right. It had done that. Tower top. It had done that. It had done that recently, right? And it's that key moment. What 4 hour for whatever tower tops on Bitcoin. They're pretty solid. But it's about context. You're expecting a rejection there. I talked about that. Daily MA20, given the context, the weakness of the prior outside candle. You're looking for a top. And you see it in the candle progression too. Large candle body, smaller, even smaller, even smaller. Look at the size of those real candle bodies. Look at the compression of the force, and then the outside bar. Look at that. That's combining Eastern and Western technical analysis. The progression of that candle body, and then classical charting the outside candle. That is like momentum just got encompassed. Boom, outside candle. Now you're really looking for a tower top. Boom, 4H outside, maybe setting up for a tower top. You got to be defensive. You have to read the trend. You see it, there it is. 40.5K, and boom, there's your tower top. So it completes. All right. It's not magic. Oh, how do you do it, Cheds? Chad, you're a magician. Oh, legend. No, it's like right here. I'm walking you through it. I'm doing these videos. And I think too many of you have been conditioned to believe that BTC only goes up. And that's with this context earlier. I talked about earlier about just like foregoing your risk, and there's no guarantee that like this 10 years is like the last 10 years. I don't like that. You have to protect your capital. You have to protect your capital. A good trade is like a first date. It starts out with an exit plan, right? You always start out with the exit plan. You can't just buy and hold because everyone else has told you that it's always worked. that may be the case. And yes, I believe I'm a BTC maxi, but like I'm not going to hold all the way down. I have, well, actually, it's funny because I do have a hodl, which I'll never sell, but I'm not like my trade portfolio. My hodl is not an amount that's going to totally overexpose me one way or another. And I want to add to it, but I'm not going to add to it until there's a capitulation, until there's volume and volatility and some type of a thesis that I can know when it fails. I'm not going to go heavy into it unless the price structure is going to allow me a way to do that and then to be quickly wrong and to know I'm wrong. Okay. For our tower top, too many of you have been conditioned to believe it only goes up, and you're buying the dips. You know, understand, you buy the dip in an uptrend. You don't buy the dip when it's downtrending, when it's correcting, right? We don't just buy the dips after it had a false breakout. You just wait till there's bullish momentum. Wait until there's a recapture on the daily chart. You get back up above these moving averages. So that you don't just buy every dip, okay? And then there it is, textbook tower top, right? Whatever, right? Great call. So I'd rather be right in the other direction. I'd rather be right, like calling like a buy the dip when it's going up. But like that's not what we're doing. That's not what's going on right now. All right. I want to get back to just chilling and relaxing. Listen, I don't do these videos all that often. I'm a founding analyst at Bitcoin.live. I do twice a week full market updates and chart requests. And we have a really great team. When you sign up, you get access to all the content, not just my stuff, everyone else's stuff. And it's a team I can really be proud of. So I encourage you to check that out. Of course, I'm on Twitter. I'm at Big Cheds. I'm the author of Trading Wisdom, 50 Lessons Every Trader Should Know. Feedback's been unbelievable. I really appreciate that. I read those comments, and it's something special. It's really something cool and proud of. I actually have a third book coming out sometime this year. I may push it back a little bit because I really want to work on it. It's trading quotes from the book, and then I've taken like all my new quotes. Like I'll go to the gym and I'll come up like a quote, like, farmers pray for rain, like traders, pray for volatility, whatever. I'm just like always thinking about this stuff. And so I have the cover art is out. I tweeted it out. Check that out. But that'll be exciting. New book this year. I'm an author. I like to write. Please do check that out as well. So I will tell you this, that trading is really hard. Trading is super hard. It's fun. And it's like when you get those wins, you think, man, all I got to do is do this again. Oh, it's easy. And so when you have a win, you got to be really careful. You got to be super careful because after wins is when you get riskier. You forego your risk management. You make $400 in a play. You say, oh, I can afford to lose $400, so I'm going to go try something. I'm going to go experiment. Like, don't do that. Be really careful after you have a win, all right? Because you're going to be risky. It just always happens. My biggest losses always come after my biggest wins. It's just a fact. So kind of keep in mind. I hope that helps. That kind of tidbit of wisdom. I want you folks to know that I do appreciate each and every one of you, even though I may not respond to your comments. I definitely appreciate you. I've been there. I've been in the trenches. I've been burned, but I'm still around, and that I'm thankful for, as I am for your continued support. Big Cheds out.